All right, testing, 1, 2, 3. Let's see if anybody out there can hear me and we can get this show on the road. Hello, hello, hello. La 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 la. La 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 la. What's going on? Nothing much. Nothing too exciting. Nobody's out there. Nobody can hear me. It's a big blank empty void. Oh, people can hear me. Look at that. The delay's got to be about a minute on this thing. All right, well, I guess it's got a buffer, right? That makes sense. I'm sure there's a good reason for that. Now, let's see if you can see the screen. Let me know how that works out. See, fine, great, thank you. All right, guys, we're gonna get this thing rocking and rolling. All right, so let's see. Dun, dun, dun. I'll have my lovely assistant read the important stuff. Oh, it's taking too long.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the website www.optionsclearing.com to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, fantastic. So how are we doing? We're down a little bit, no big deal. Looks like we got out of the NASDAQ too soon. We shorted the NASDAQ up here. Let's look at the other chart. So okay, so we shorted the NASDAQ. We've been waiting for 2 days. Yesterday I said I wanted to short the NASDAQ at 11,000, and it did. Oh wait, yesterday. And it didn't quite work out because it went down. Well, it went down a little bit in the morning, then it went back 11,100. Sorry, so it went down a little bit in the morning, then it went up, and then it went down, and then it went up. So yeah, they never. I mean, this was an okay short. It was 11,000 down to, well, that was a good one. But then once it went back up, we didn't have another chance to short. Then it stayed over. Oh, I'm sorry, that was 1150. We didn't get to it yesterday. I'm sorry about that. It's 11 here. 11,100 was a goal line that we had here. Or what did I say? Now I forgot. I think we were trying for 11,000. That didn't work. Let's see what the hell we were doing. Can't remember a day ago. It seems like, you know what it is? It's because you're home all the time. And every day seems like the same, like you don't go anywhere, you don't do anything. It's like you can't tell what day it is. If I didn't have this job, I think I'd be like completely losing it. Wow, that is not, is that this week? It is, okay. So what were we trying to do? I'm sorry, yeah. Below, okay, so we can short the NASDAQ futures below the 11,000 line or the 11.1 line if we hit that first. Now, so I said that at 8:30-ish. So just to be clear about what the plan was. And here's 8:30-ish yesterday. So I think we were kind of down around, or well, we were above. That's what it was. When I wrote this, it must have been around here. So we were right about the 11,100 line. I'm sorry, the 11,000 line, but we went up first, didn't quite make 11.1, came back down, hit 11,000. That was a good short for a teeny ride. It's not, I mean, a little bit of thing. Then it bounced back up. Then it didn't make it to 11.1. Then it comes back below 11,000. Then you make a good run here, comes back up. Now, if you don't short, if you can resist the urge to short on the way up, this is the key. Here's our 11,000 shorting line, right? So in the morning at 8 something, I said I'd like to short it below 11,000. We didn't get back below 11,000. We went back up. Didn't make it to 11.1. So there's no play. You got to have the discipline. Now on the way back down is when you want to short. Back down, back down, back down. Once you cross below 11,000, you short with a tight stop above it. So we short. It comes back down. All right, then it bounces back up. There was a bounce here, made it a bad play. I remember doing that. But it spiked up quickly, so it didn't really stop out. But it went down, it came down, it did this, it came all the way down. And now once you've made 11,000 to 10,950 is $1,000 per contract profit. Once you make $500, $1,000, you better be protecting those gains. Then it goes back up, and what I just said today is at 975. Or not 975. I mean, when you get down to a 700, if you go from 1,000 gain to a 750 gain, or if you go from a $500 gain to a 250 gain, you should be absolutely stopping out to lock in the rest of to lock in your profit. Then when it comes back up, now you don't want to short it when it just goes back over the line. You want to just get it when it comes back down, and momentum has to be in your favor. So here it never made it back to 11.1. Comes back down, tests 11,000, takes off like a rocket without crossing it, goes all the way past our 11.1. So again, this is no short because it's going the wrong way. This is a short, but it doesn't really get down, but you wouldn't know that when you're making it. So you take this one and you do a $50 stop out. So you lose money here. Then it comes back down again. You try it again, $50 stop out because it didn't work out, didn't do anything. So here you have a couple of losses, but we had 3 nice gains here. Then you're back up, then you're over. Now we're playing the 11.1 line. So again, down and a $50 stop out because it doesn't work out. Down and another $50 stop out because it doesn't work out. But then you get back in again, and all of a sudden, boom, you're making some good money. You know, you can just play the same thing over and over again. Now today, then, we never really got back. We went to 11.1. It didn't, I mean, I wasn't playing at 10 o'clock at night, but it goes back up. Today we had a really nice run all the way to 11.2. I wasn't awake, so I didn't even know about this. I would have loved to have shorted that. But by the time I got involved, it was getting towards here, and it was too high to short. I didn't play it this morning because it was too high. I didn't trust the levels. But then once it crossed 11,000, jumped right in, of course, made these 4 bets. And at 11,100, we take the short. It got down to 11,050. When it hits 11,050, we're up 1,000 a contract. And I wrote in the chat room, let's lock that in. You want to stop out the rest before it gets to 1175, because that would lock you in for 750 a contract. And that's pretty much exactly how that worked out for 4 contracts, 750 per contract, because we did in fact stop out 1175. Then we went back to 11.1, but for whatever reason, I wasn't paying attention, so I missed it. Then it had, that was another shorting opportunity. Huge drop all the way to 11,000. Could have made a fortune, didn't. But the point being, this is how you play it. And obviously, once you're such a greedy bastard. If it goes from 11,001 to 11,000, that's a $2,000 per contract gain on the NASDAQ. If you can't take that off the table, you got something seriously wrong with you. And that's literally in like an hour you make that kind of money, 2 hours tops. And why were we shorting the NASDAQ? Because if you look at the NASDAQ, it's above the other indexes. It's not a complicated concept. If we go to the futures and we look at the index futures together, on an hourly basis, who's outperforming? You short the one who's outperforming the others, unless there's a really solid reason that they are, like let's say something great about Apple or something like that. But generally, you want to short the guy who's overperforming. Right now, that's the S&P and the NASDAQ. And since we think the NASDAQ is way overpriced and the S&P is just overpriced, we want to short the NASDAQ whenever we get a good opportunity. And if you look on the weekly, let's take a look here. Here's how you can see how really overpriced the NASDAQ is. No, you have to go monthly. But on the monthly basis, you can see the NASDAQ is up from 4,000 to 12,000. You got to be careful because these things are they adjust to fit the set. So in other words, here you're looking at a 200% increase, or 3 times. This is a 3 times here. This 16 to 28 is only double, not even double. This 2,000 to 3,500 is up. Well, 4,000 would be double, so it's not even double. So I guess, and 1,000 and 1,600 is up 60%, right? So I guess when I say it, I got to be careful about that sometimes, because I'll just look at these and say that and say, oh, see how high the NASDAQ is by comparison. Yeah, because I'm kind of taking into account automatically, I'm doing the math and looking at that. But I just want you to understand what I'm saying when I say that, because I know visually it doesn't look that way. But when I look at this chart, I see 7 to 12. It's part of my general skepticism in life. You know, it's like, as I'm sure you realize, it's like I generally look at things very skeptically in general. And so I'm going to look at a chart and I'm not going to take it at face value. I look at like, what is this chart made up of? You know, this could say apples to oranges and this could say grapes to pears. You know, it's like until you check, you don't have to do that. In fact, there's a book, Martian, Stranger in a Strange Land, Robert Heinlein. And in this book, Stranger in a Strange Land, the guy has one of his assistants is what they call a fair witness. And a fair witness is a person who is trained to be an observer. And as an observer, they are trained to be a completely impartial observer. So they have sort of like an eidetic memory, where they recall every single event, but only exactly as it was. So in other words, they train not to make inferences. So if you say, you know, what color is that cat over there? And they would say, oh, well, the cat is brown on this side. They wouldn't say it's a brown cat because they don't know what the other side of the cat looks like. They only can tell the side that they're seeing. So that's what I mean by exact. They question everything and they only report exactly what they see. That made a big impression on me when I was a kid, and I've always sort of thought of things that way. And also, I took a really great course in college called Critical Analysis of Public Information, which, by the way, was like the first time I had ever been exposed to the concepts. And this is 1980, early 80s in college. And that was the first time I had been exposed to the concept of the media is not really telling you the truth. And this teacher was phenomenal. I mean, he's probably the greatest college professor I ever had. And and she would teach us to read the paper and think about what's behind these articles. And I mean, you know, we were trained at the time to trust the newspaper and to think that anything you saw on TV had to be true, otherwise it wouldn't be there, and everything in print had to be true or it wouldn't be there. And she showed us at that time what complete bullshit it all was and how everybody's acting in their own interest and how people have points of view and so on and so forth. And I was receptive to it because of this concept of a fair witness from the Heinlein book. So it always sort of like, yo, so I think if you say, how did you get to be the way you are? I'd say I really would have to say the roots come from reading Stranger in a Strange Land by Robert Heinlein, really taking that concept of, for some reason, it just always struck me that was correct, that you had to observe things and take your own ego and your own self out of it and just report what you actually see and peel away the nonsense and don't insert your opinions into things. And and I know a lot of you guys are saying, oh, well, he's always political about stuff. I don't feel like I'm political, frankly. I mean, I know I'm considered a liberal, but I just basically come to this point of view because I reject the alternatives. I have delved into it and decided that this is the correct strategy for overall survival on this planet. Clearly, having tried the conservative path for 4 years, it's seeming pretty obvious that the conservatism is not conducive to either prosperity nor survival of the species. This is something I've believed for many years, and that's why I'm what they call a flaming liberal, because I really think the alternative is doom. But anyway, so that has neither here nor there on this thing. But point being that this has shaped me into the kind of person I am, so that when I look at a chart, I do not even assume that that says 2020 until I read 2020, that I know I'm comparing 2020s. I don't, and here I know that this scale is very different than this scale. So I can see that like right away. And so when I say the NASDAQ is really over the S&P, it doesn't look over the S&P, but if you do the math, and I say 5 divided by 7, right? 5,000 divided by 7,000 is 71%, while the S&P is 12 divided by 22. 12 divided by 22, 54%. So the NASDAQ is 50% more gain than the S&P, even though the charts look identical. Very important concept that you need to carry through to everything you look at. A chart is not a chart. There are algorithms, and there are algorithms that compress them into fit the space. And of course, it is useful. It would not be useful to have the NASDAQ chart go off the charts because it's trying to measure in the same way as the S&P. But then again, it is useful because you want to get an accurate representation of what the NASDAQ is really doing. And this is not giving it to you. This is not comparing a like gain. This gain is 50% more than this gain, but you can't see it. It looks like they're doing the same thing. What you can see, though, is this insane explosive growth. They were growing at the same pace until the crash, and since the crash, the NASDAQ has ridiculously exploded, 75% up since the crash. Until the crash, all these guys were pretty much on par, gaining similar amounts. Since then, the NASDAQ has gone completely insane. Therefore, I like shorting the NASDAQ. See? So, read a book, take a class, be a skeptic, short the NASDAQ. That's where and that is why QQQ and TQQQ are the primary shorts in our short-term portfolio. See? It's good when you step back and think about why something's happening. That tells us like this is where it comes from. So I didn't think about that at all until I was just looking at this chart, and I'm trying to say I'm saying to you guys, well, the NASDAQ is clearly running away, but it's not. I realize while I'm saying it's not clear because they look like they're all doing the same thing, but they're not at all. The NASDAQ is much higher than the other indexes. And of course, if you're looking at the chart, you say, well, that's because the NASDAQ had a slow start because it was way down here. Not at all the case. It's because the scale had to be adjusted. This scale had to be adjusted to that scale because of this gigantic run that the other indexes did not do. The other indexes came to here and stopped. The NASDAQ went 20% over, and it's being corrected, and it will come back to this spot at 10,000 eventually, and we will make a scads of money in the short-term portfolio. See how that works? Easy. Everything is easy when you think about it. Everything is easy in retrospect. That's the funny thing. Speaking of the short-term portfolio, 350% on the weekend. La 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 la. You know what would be interesting for you guys is track the progression of my senility over time. I think that'll be fun. Let's do that as a game. It's like, how many times do I forget things? Like the word weekend just slipped my mind. I'm like on the, you know. So let's see how bad that gets. You know, take me now and then take me like in a few years and see how much, how many more things I forget. Math is gone. We already decided that. I can't do a webinar and do the math in my head at the same time. You know, that's a problem. The short-term portfolio. La 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 la. Okay, so we did our portfolio review on the weekend. I still didn't put up the small portfolios. Wow. Okay. We didn't, the adjustments aren't posted in yet, so take it with a grain of salt, but we were up 60%, and now we're up 350%, and that's without being touched. We didn't adjust these. Is anybody's fault here? This one, the CMG's expired, September 1050. That's got to be part of it. How much were the September 1050s? Okay, that accounts for, well, let's see. It was minus 56, so I guess that accounts for 50,000 of it. So 50,000 of it, which is 10%. Well, no, I'm sorry, it's not 10%. Sorry, big difference. It's 60%. It's because it's only a $200,000 port. It only started as a, oh, and then we put more money into it, didn't we? Oh, this will tell me. Starting, oh no, it was 100. Damn it. Okay, so it started with 100. So that's 60%. So this position going to zero, the CMG short calls, not because it really went to zero, but because it expired and I didn't make the adjustment yet. So this is now zero, so it gained $56,000. So 56,000 of the gain is because of the CMG. So take away the 56,000 and call this call that 300% basically. So still we went from 60% to 300%. But why? Because Tesla. And of course our hedges picked up. So we're in really good shape. As we expected, we have phenomenal protection in the short-term portfolio. And again, knock off some money. So let's say 400,000 in the short-term portfolio. And the long-term portfolio hasn't collapsed yet. I'm sure it's down, but we'll find out. 93, ouch. Damn, we were over 100. But still, 966 plus 400 is 1.3. 1.35 billion. And as of the weekend, we were at 1.2 billion. So we've gained $150,000 roughly since the weekend. Why? We're balanced bearish. This is exactly what we want to be. Our portfolio is playing for this kind of market. We expect this choppy thing on the downturn, and that's exactly what we're getting. So it's perfect. All right, this is how we're playing the market. I mean, and not only that, though, we're probably doing better because we took out a couple of longs. Oh, so back to the portfolios. What did we do that is not reflected yet in the portfolios? Because I haven't made all the adjustments, but TQQ we took out. So we're done with that position. We put more money into SQQ. What I did is I rolled 100 of the 25 calls to 200. That's a big deal. We had 100. Where are we? SQQ. We have 100 of these guys of the January $25 calls. And because we sold TQQ, took that money off the table, which was 75,000 bucks. So we had 75,000 now to spend on other hedges. So it wasn't like we wanted to reduce our hedges. We just wanted to take TQQ off the table because it was too volatile to leave on in case the NASDAQ popped back up. And that is what happened the last 3 days, right? The NASDAQ popped back up. We were down here on Sunday. I didn't want to risk us going back and wiping out the TQQ. It doesn't have enough time. So we took the money and ran. That was fine. So that was step number one. We're done with this position. Now, why were we done with it? Because the spread was a $75,000 spread. All right, we're already at $75,000. We're not going to make more money if TQQ goes lower. It wasn't worth staying in the spread. And we already took the short put money off the table. So it's crazy to like keep going. So what we had here, this naked TQQ put, right, was at, well, it's at $86,000 in fact. And so what I was saying is that if we covered it, because we can't just leave it naked, if we covered it with the 85s, it wouldn't be worth it, because then we'd still make the same money if it hits 85. And meanwhile, it's all the way at 119 or 115, and we already had that $86,000 in our pocket. So just take it off the table and forget about it. It already made as much money as it would make if it went to 85. Why? Because the time value and the premium is in that position. As it goes down, even if we hit our goal, if it takes us 2 months to hit our goal, all the premium washes out of the position and we're in the same place as we are now. So the only way this makes money is if it drops severely quickly. And that's not worth betting on. We have better ways to make our bets. So we take that money off the table. And I said, great, here's what we're going to do. We're going to roll 100 of the $25 SQQ calls to 200 of the June 15-30 spreads. And that's not spending much money. We only spent $27,000 to make that change. Why? Because we capped the gain at 30 bucks. But we moved the $25 calls, which were at the money, to 200 of the 15-30 spread. So now we're $10 in the money on 200. It's $200,000 in the money. So we cashed a position for $73,000, dropped it $200,000 in the money for $27,000. And we still have another $100,000 of upside if it keeps going. If it goes up to 30. So massive upside. And that's what we did. So that was adding a hedge that made me very happy. And that, of course, is going to pay off brilliantly right now. SDS, we did the same thing. We made another aggressive adjustment on SDS. We didn't spend too much money, but we made an aggressive adjustment. We took the TQQ money, put it into SQQ, put it into SDS. With CMG, we still have to roll out 3 short September 150s, 1050s to 5 short, actually, so we rolled them. So we rolled them into 5 short January 1200s, and we will sell 2 January 1100 puts. Okay, that was a good balance. I like that. Smart. Good job, Phil. Good job, Phil, from the past. UNG. And we lost ground on the pullback. Let's take advantage and buy back the short 12 calls. Oh, that was brilliant. Brilliant. So we had a pullback. See, it's as surprising to me as it is to you. I'm like, wow, that was a great idea. But again, why? Why is it that I do this stuff? I was in the middle of working on Friday and doing all this stuff. Why was it that I see this? Because on Friday, about here, we're down below 12. I like natural gas below 12. The chart looked terrible. The chart didn't have this bounce in it. The chart looked like we were going to go to hell. But I'm doing my fundamentals, and I'm saying to myself, this is as low as I think it should go. So since we have this chance to buy back the short $12 calls, which were down, they weren't even down that much. Wait. What did I buy back? Oh, I think they were called. We lost ground. Let's take advantage and buy back the short 12 calls. We lost ground on the pullback. Let's take advantage and buy it. I'm confused. I think I thought the puts were calls. Ha ha. See, tracking my senility. Those are puts. I did not mean to buy those back, so I apologize. That was definitely wrong. Nobody caught that. I thought those were calls, and I thought we had a spread. That's why I was looking at I thought we had an 8-12 spread here, and I wanted to buy them back. So it doesn't matter. So we hopefully didn't buy them back, because I totally believe in the $12 puts short. But the point is, we have 100 long UNGs, and my concept was, which I was wrong about, was to uncover them, to let them ride, which is where we are anyway. And this dip was just something to take advantage of. That's all you buy back. If you have short calls, you buy them back. Then on the long-term portfolio, that was 1039, up 107%. So it's actually only up 90-something% now. Oh, there you go, 1039. So $70,000. So this dropped $70,000, but the short-term portfolio gained $240,000. So that's a winning combination. That's perfect. And that's where we want to be. We want to be in a position right now where we make more money on the way down than we do on the way up. Why? I don't believe in this stuff. I don't believe that this market can last. I think we're in a really precarious, dangerous position. I certainly got no confidence from the Fed speak this week. How didn't make me feel any better yesterday. Anyway, long-term portfolio. What did we adjust? That's the question. Now remember, last month we took away all the short puts. Why did we take away the short puts? Because they're painful on the way down. And by the way, not all the short puts. Most of our positions have short puts in them. But the naked short puts that aren't even part of a position, I don't want to deal with. I don't want to have that be a margin constraint that I have to deal with on the way down. And I mean, on the way down, I mean, I expect a 20% pullback in the market. So what did we adjust? Berkshire Hathaway. We sold some short calls just to offset some of the potential losses. Honestly, not too bad about these. Wow, very little adjusting. Whoa. Oh, wow. No shit, that was the only adjustment. So much for that. God, we love these positions, don't we? Let's see why. All right, so Harmony Gold Mine is 100% in the money. I know it's 100, it's 100 and 200% in the money, basically. Coca-Cola, 20% in the money, or 120% in the money. Micron, 180% in the money, or whatever the hell that number is. 175% in the money. No, 166% in the money. There you go. And Mylan is in the money, but holy crap, how could you not want to buy this one? So these are all good. Berkshire Hathaway, it's just a bull call spread, so it's really not a big deal to adjust. And so what happened? I said, how about we make money selling? So what I did is I took this one and we sold some calls against it, but we have another one. I should have mentioned that. We do have another long position. So we have 2 long positions and we're selling 5 short calls. Really not like we're taking a big risk. I felt bad having those be just naked and sitting there. It's not so much that I think Berkshire's going to go down. All right. It's that it's like having, I have like a couple of ski condos in various places. And it's a shame not to rent them out, right? I mean, so if they're just sitting there and nobody's using it, why not rent it out? It's just a principle of the thing. It's like I'm paying maintenance, I'm paying taxes on it. It's like I can just, at least break even and have it a write-off. And believe me, it makes it a lot more fun to own when you're not paying for it. And it's like when it's not a burden. I know when I was younger, we had this place in Killington. It was the first place I bought. And it cost about $11,000 a year to keep it going. So, every year is $11,000 to have a 2-bedroom place in Killington on the mountain. And totally worth it. I mean, freaking got tons of use out of it and everything. It was 2-3 times a year at least we'd be up there for for a long weekend or something. And the whole family was there. My friends would come, and it was fantastic. So nothing wrong with that. But we started, but it was still $11,000 a year. So I started renting it out. In the weekends I wasn't using it. And we would basically break even. I mean, on the whole, we'd pay the rental company. We rented out for like $20,000, but because it was in Killington, I would pay the rental company like half the money. But it was great because we would basically end up with $11,000, and that would pay all the expenses. And on my tax forms, I wouldn't pay any taxes because the rental company was an expense, and all the stuff was an expense, and everything got expensed out like a business, and zero. But I own the place. My place, use it anytime I want, totally free, no expenses. That was a great deal. And doing something like that, giving myself a free vacation 2 or 3 times a year that we could use, and having that cost of those trips cut in half, what does that really do? It really puts money in our pockets every year and allows us to save and push forward because you're making intelligent use of the money. It's not just that you're spending only $11,000 on this place. Say, oh, I'm only spending $11,000. What do I need to save that money for? Because, and I'm not going to go back there again, but because I'm like, well, yes, screw this. I'm sorry if you get bored with it, but I'm going to tell you over and over again. So if we do a compound rate calculator, okay, money chip. All right, so it's the bottom line is it's $11,000 I'm not spending, and even better, it was $11,000 after tax dollars I'm not spending. because that money would be after-tax money I was spending to maintain this place. But by turning the place into a business and renting it out, I'm breaking even. But what I'm getting in return, aside from breaking even, I'm still getting my original intention on the place is a free vacation, right? Still got my free vacation, but now I'm breaking even on the place, and I'm not paying $11,000 out of pocket. So now instead, I take that $11,000, so we say 0, and I add $11,000 a year. And I've been doing that since after college. I bet because I always went to Killington when I was a kid, and so the first thing I did when I had money was buy that place in Killington. Before I owned my own house, I was renting my own place, but in Killington, I knew the real estate market like the back of my hand. So that was literally 30 years ago, at least. It was more than 30 years ago. Let's say 30 years. And interest rate, there was no annual addition 30. There's no interest rate. Let's say we didn't. Well, I'm sorry, that's not true. So let's say I take that 11,000, and even if I make 8% in the market with that $11,000, $1.3 million, simply by deciding not to spend $11,000 and to break even. Because what happened to the extra money? Goes in the market. Goes in the market, goes in my businesses, goes in other things that make money. It's an opportunity cost not to make money. And so, going back to the trade, see, not that scene, I still remember what I was talking about. Going back to the trade of Berkshire Hathaway, I own my Berkshire Hathaway condo. I expect it to appreciate in value over time. Okay, I expect that this Berkshire Hathaway is going to be worth, I paid $10. So we paid 10 or $15,000 for it in March of 2020, and by June of 2022, I expect to be worth $30,000. I expect to double my money. But while I'm waiting 2 years for this thing to appreciate, it's a dead asset. It's sitting there doing nothing. What can I do with it? I can rent it. I can, while I'm waiting for my asset to appreciate in value, I can rent it out. And that's what I'm doing. When I do this, I said, how about we make another $5,000 selling 5 January 220 calls for $10? So all we're doing is selling 5 calls for $10, making $5,000. And it's only 1/3 covering, and I have this other Berkshire play too, but forget that, even on just this play. So I'm just taking the spread, which is going to make, this spread is going to make $15,000 if it goes well. I'm selling because Berkshire Hathaway is at, well, I mean, that is where it was at the time. I didn't have the chart. So let's see, Berkshire, BRK-E, yes. So again, I'm valuing Berkshire, and I think that it's toppy here. I think it's toppy here. I wasn't even looking at this chart, but I think it's toppy because it's at the top of the range. Yes, it's in a range. Yes, it's going up. Yes, it looks good, but it's still at the top of the short-term range. And I think 220 is a fair value for Berkshire going forward, given my concerns about the market. I think Berkshire will get dragged down with the market. When it gets down to 190, I'll be bullish. But right now, at 220, I was bearish, and that's where it was on Friday. So I said, hey, we could sell. Some sucker wants to pay us $10 for the January 220 calls. I think that guy's wrong. And if he's right, then my long position is 100% in the money, and we're going to definitely make $15,000 anyway. Also, I know, since I understand options, I know that I can roll this contract along to a much higher price. And you don't have to be a genius to figure this out. You look at the Berkshire, getting ugly. All right. You look at the Berkshire Hathaway BRK/B in this one. You look at the Berkshire. See, how do I know those things? How do I remember all that? You look at the Berkshire Hathaway January 220s, which I thought were silly at 10. They are now 750. But when you're selling them, you say, well, okay, I can get 750 for these. So where can I roll them to? Well, what kind of rolls would you have? I'm back to June 2022 down here on my longs. So I know that if I have to roll to January, let's say I roll them to June of 2021, all you have to do is look and see what's 750. Well, the 230s are $9, so I could roll it there. Then in January of 2022, what else is 750? Oh, these guys, the 250s are 750. So you just look forward and say, where am I going to roll it to if it goes badly on me? And how do I feel about that? So it's 250. So now I go back to my chart of Berkshire. And I say 250, well, that's way up here. I don't really think it's going to go to 250. I don't think it's going to go, you know, if we look at a normal chart, it's normal-ish, BRK, you got to be, oh no, you're a slash also Berkshire. So if I look at Berkshire over the long haul and I say, well, how feasible is 250? That doesn't look too likely, right? In the last few years, it's stopped up at 225 pretty consistently. It popped up to 231 here. 250 is a hard slog for this stock. And we're coming off a rough year. So I don't think it's all that likely that we're going to be here in 2 years. And even if we are, we can deal with it. We can always add more longs. We can buy more spreads that are going to double up underneath it. We can always double our contract and roll it to a much higher strike. It's only 5 that we're covering. So there's lots of ways to win. And the only really way to lose is if Berkshire Hathaway suddenly pops 15%. One of the biggest companies in the world. And I know you'd say, well, Apple did that. You know, it's true, and that's true. The problem is Apple did pop 15%. It is the biggest company in the world, and more so now. AAPL, not APPL. So, you know, Apple did that. Apple went from 81, and what's 20% on 81 would be like 96. There's 96, just blew the doors off of 96 and went all the way to 137, although now back to 96 or a little bit higher. It's probably not going to stay there, but it can go there. You have to be prepared to ride that out and deal with it. So yeah, it's not a foolproof system. You don't know for sure that your stock's not going to do that. Of course, obviously, Berkshire Hathaway is never going to be as exciting as Apple. Berkshire Hathaway has a more diverse portfolio. Berkshire Hathaway is much more oriented to consumers, and we think the consumers are having a very rough time right now. You know, all denials to the contrary from the administration, the consumers are really hurting. And if they weren't getting $300, if they weren't getting $1,200 stimulus checks, and if they hadn't been getting $600 weekly supplements in their unemployment, they would have been far worse off for the last 2 quarters. Now, Trump's bullshit 300 things have already run out. So that lasted a month. There's a slowdown in employment. We're not really getting these jobs back. We're back on lockdown. Businesses are falling apart all over the place. This is not a good environment. This is not the kind of environment I think Berkshire is going to jump 20% in. So I have good, solid reasons to collect $5,000. And then, by the way, that's $5,000 for January. So January is what, 90 days? Wait, you can see on Thinkorswim. So January of this January is 114 days. So 3 months basically, right? Just over, like let's say 4 months. How many, or let's say how many days? In June, June of 2022 is 600 days. So we're selling roughly 1/6, or let's say even 1/5 of the total. So the question is, here's the interesting thing. If all goes well, we can make 5 sales like this of $5,000. We can make $25,000. Our potential profit on the spread is only $15,000. We can make more money selling short calls than we can on the entire spread. They're not always going to all go well. Not everyone is going to finish off where we want it to, but that's how the butterfly portfolio works. Okay, we make the money selling the premium, because no matter what, and that's the thing, The only sure thing in the market is that if we sell the 220 calls for $10, that $10 is 100% premium. And the only thing that we know for an absolute fact is that in this January, no matter what the price of Berkshire is, this premium will be zero. Zero. Whether it's up or it's down, the premium will be zero. It's not about that. It's about, there's two factors to this. We know we're going to make this $10 in premium. I know if I sell this 5 times, I'm going to make $50 in premium. Therefore, I pretty much have $50 of a buffer to play with because we're going to keep selling premium. Whether or not this is above 220 by $50, that's where my risk is. Is it going to be at 270? If it's at 270, I won't make any money. If it's above 270, if it's under 270, we're going to make some money. So we're not just betting Berkshire stays below 220. We're betting Berkshire stays below 270 over the next 2 years. And by the way, we don't have to always be right. We just have to be right once. So in other words, if we always extrapolated along this line, okay, and let's say in March we sold the May, here we are. Let's say we're here in March, right? And we sell the May 200s. Well, that works out great. If we sold the June 200s, we would have had a little panic here, but then it would have worked out anyway. If we sold the August 200s, we would have been screwed. Not screwed, but I mean, obviously we wouldn't have made as much money. It would have been up here when it expired. Then we would have rolled it to the 220s of maybe September or something like that. Not September, sorry. Maybe October, maybe November, December. So we put it to these 220s, and now we're waiting to see how that pans out. But we would have made money, lost money, and now we're waiting to see what happens in the next cycle. That's all. You don't have to be right all the time. You just have to be right some of the time, and the options expire completely worthless, and you keep all the premium that you collected. That's the core of the whole strategy. All right, and then the other positions are we're very happy with. We got Caterpillar, another bull call spread, but we're leading it. The bull call spreads are safer. This is deep in the money too. It's 150, and we're at 120. These are deep in the money. We're just waiting for them to pay off, really. Plains Pipeline's on track because we sold the 5 calls. It's at 7. Broadcom is a mile over our target. Berkshire again, well over our target. Cisco on track for our target. We're not too worried about them really. That's why we couldn't move. We didn't make any moves. There's nothing really changed. FL's on track. Gilead's on track. Our target 65. We're at 65. If it pulls back, fine. We still got 18 months to get back to the target. It's not like it's devastating to be off target. GM is way over our target. IMAX is right on track for where we want it. Intel is, oh, look at Intel at 50. What happened? Holy crap. I didn't know that happened. Everybody's telling me I was crazy to pick Intel. Well, that's weird. I thought it was lower. I thought it was more like 45. So we picked up Intel. Well, what's the date on our Intel position? Oh yeah, I can look at it this way. How much prettier. We got Intel on July 24th. Right there, right when it started dropping. And we picked up really good premium because it was in the process of dropping like that. You get a really big premium. So we got some good money off of that position. So even though it hasn't actually gone anywhere, it's still, oh, well, these guys aren't. What? That's weird. I guess we paid too much premium for those. My bad. Okay. So we paid a lot of premium for that, and that's down considerably. I was going to say, even though we do have some profit here, but we don't have the profit there. That's pretty odd. So we bought the 45 calls for 11. and we thought it was going to bounce back. It hasn't bounced back yet. It's at 50. So basically they're 5 in the money, 6 of premium, but the premium went down. And now we're out. What about $2? We're down about $1.50. So we're down about $1.50 per contract. Not devastating, of course, but annoying. But that's all premium. Laboo's Biotech, miles in the money. Macy's, you guys know I love that. Middleby, miles in the money. The marijuana ETF is not doing very well. It's on track. I mean, the 510s are on track. The short 20s are in trouble. 3M, miles is 100% in the money. Philip Morris in the money. Anyway, every position's like that. They're all fantastic. You know, we made incredibly good value decisions. That's why this portfolio is up 100%, now 93%. Even if it pulls back, though, we still got 18 months to recover, and I think that's enough. I think that 18 months from now, even if we have a really tough year, I think that by the time we end 2021, we'll definitely have a vaccine. They'll definitely see some sort of light at the end of the tunnel, and then people are going to be in a great mood. And hopefully Joe Biden's president, and we can look forward to a future like where we get back to normal. Ooh, well, I didn't mean to click on that. Okay, you can ponder that for a minute. So 9/16 was last week. We had 6.6 million cases, 196,000 deaths in America, 29 million in the world. All right, wow. 6.6, 196, and 29. $6.9, 300,000 more cases since last week. 201, 5,000 more deaths since last week. And 2 million more global cases. That was 29.6. So it's 2 million more global cases, 300,000 of them in America, 5,000 something deaths since last week. That's where we stand. This number's got to be concerning them. 300,000 more cases. That's like 20% of the 6.6 million we had last week. More cases. 20% more cases in 7 days. This is a catastrophe. Okay? You have to vote like your life depends on it. And you have to get other people to vote like your life depends on it. Not like their life depends on it. Your life depends on it. 20% more cases in 7 days. And what's being done? What is our government really doing to stop this from spreading? All of them, not just Trump, all of them. Every single one of these people who are enabling this son of a bitch and this administration and everything else, and the Democrats were just saying, we need $3 trillion. They said last month, we need $3 trillion. We need a lot of money put into PPE supplies. We need to take this crisis much more seriously than we're taking it now. And where are we? Nowhere. Blocked and rejected. Okay? You can't avoid dying from this if it starts spreading to the point where everybody starts getting it, which is, we're basically at that point. 20% more people. And here you go. Let's see how that plays out. Let's go to the compound rate calculator. So you start off with 6.6 million people, and you have a 20% interest rate, and there's no annual addition. We don't add people, although you do really add people. But then we say just 1 week to grow. And that's how you get to, what? 7.2. Oh, it's only 2%. Sorry, it's 2%. Ah, my bad. There you go. That's my bad. 6.7. Well, no, it's not 2% then. I did the math wrong. See, senility bothers me because I used to be able to do that in my head without even thinking about it. There you go. Sorry. So it goes to 6.9. So it's 4% in a week. I was doing the absolutely wrong number as a base. So 4% in a week. 686, 5% in a week. There you go. Okay. So it's a 5% growth rate weekly. So let's see that. So instead of years to grow, it's weeks to grow. So that's what happened in 1 week. What's going to happen on election day? We have October. So that's 1 week, 2, 3, 4, 5, 6. 6 more weeks. So let's give it 7 total weeks to grow. 9.2 million Americans. 50% more people will be infected by election day. Now, what if we do nothing and give it 52 more weeks after? So Trump wins, and 52 weeks later, 52 plus 7. So 59 weeks later, November next year, how many people are going to be infected in America? 117 million people. That's half. Very close to half. Good job. So in 1 year, and everybody is telling you, all these virus experts telling you that we have no chance basically of controlling this thing in the next year. That we're not getting anywhere, and the only thing that's going to change that is going to be the Joe Biden plan, which is not the Joe Biden plan, it's a science plan. The science plan is everybody wear a mask, limit social gatherings, don't allow people to walk around in public without a mask. You have to treat this like a serious health crisis. And then maybe you can cut the infection rate down by half. All right? But you know what the difference is? 59 weeks, right? If we go out 52 more weeks, that's 111. 111 weeks, here's how many people will be infected. 1.4 billion people. Everybody in America times 5. If you go 2 years without fixing it. 59 weeks is a year from November. If you re-elect Donald Trump, that's what you're looking at on an infection rate. Okay? If Joe Biden is elected and we cut the infection rate from 5% to 2.5%, it goes from 117 million infections to 28 million infections. 90 million less people will be infected by taking simple precautions that every single scientist has been telling us have to be taken for months now and have not been listened to by Trump. 90 million is 1 out of 3 people. So look left and look right at who's in your family. One of you will get the virus in 1 year. Okay? It's not politics, it's our lives. You guys know I know my numbers, even though I get them mixed up sometimes, but I know my numbers, I know my facts, I know my statistics. This is real. This is what this election is about. This is about whether or not my children, whether or not somebody in my family gets this virus and is sick and is possibly permanently disabled because of negligence. Continued negligence. We never should have gone this far in the first place. We never should have had this kind of infection rate. We never should have had a base of 6 million infected people in the first place to build off of. But we have it. It's here. You can't stop that now. We are growing at a faster and faster pace all the time. And we've done the idiotic thing of putting our children back into schools. That's a disaster. All right, and that goes back to, again, why I think the economy cannot continue to prosper. No matter how much you prop it up, no matter how much you pray, no matter how much you wish it's going to go higher, the economic reality of a nation facing this economic reality. And I don't know if you guys know people who've had it, but it's a terrible, terrible disease, and you do not recover right away. And a lot of people are not the same at all after getting it. It's not the cold. It doesn't, you don't get over it and go back to your normal life. It slows you down. It has a devastating effect on you. And the horror of thinking that this is something my children could get. You think I'm not angry? You think I'm not pissed off at this government and the negligence and the disgusting disregard for human life when it's my own freaking children? I could not possibly be angry about what's happening here. It's bad for our people, it's bad for the economy, it's bad for our future, it's bad for America, and it's happening right now. What the hell has this man done to stop it this week, this month, last month, ever? What has Donald Trump done? This can't continue. It can't. And frankly, it's just like Obama when he came in after Bush's catastrophe. It's not magical. As much as you wish it would go straight down, the transmission rate will drop quickly. If we really enforce this mask stuff and we tell these, but you're gonna have to pretty much be at gunpoint. I mean, literally these people in the red states are basically, they're screaming about their constitutional rights, speaking of the Supreme Court, right? They're speaking of their constitutional right not to wear a mask. That's going to go to the Supreme Court. Do you have to wear a mask? Can the government make you wear a mask? What if the Supreme Court says no, thanks to the Trump legacy? What if the Supreme Court says, no, you don't have to wear a mask. You're an American, you're free. Go infect people, have fun. Do you have to wear a mask? Do you have to maintain your store in a certain manner? Do you have to follow state guidelines for prevention of the spread of a disease? What if you don't have to do those things? What if they all go to the Supreme Court and they all say, no, don't worry about it, don't worry about it, don't worry about it? Then that 5% is not even under control. All right? You don't have to be any worse than 5% to ruin this country in 2 years. If there's no vaccine, we're right there for sure. That's in 1 year from now. In 2 years, like I said, in 2 years, you go up to 111. Whoops. 111 is doomed. Anything worse than where we are now is half the country. 59 weeks from today, 117 million people infected. You're either going to cut that rate, or what if it gets worse? What if sending the kids back to school puts us up at 7% infection spread? There's the whole country infected. Congratulations, you've hit herd immunity. That's herd immunity with 20 million people, 30 million people dead, and tens of millions of people debilitated for life. It's like when we used to have polio. We used to have polio. People would walk around with braces. They had wheelchairs. Roosevelt was in a wheelchair. He had polio when he was a kid. It's not a one-time thing. It was a devastating disease. And you can't just let something like this go, and you can't ignore it, and you can't hope it goes away. You've got to do something about it. And we're not. Believe me, I live in Florida. We're not. My kids live in Jersey. They're like they got some serious restrictions. They don't live in Jersey. Well, Jackie's in Hoboken now, and Maddie's in Philadelphia. And Philadelphia is pretty good. Jersey is very good. Jersey's serious about the lockdowns and everything like that, except for the Jersey Shore people. And I showed them pictures of Fort Lauderdale. They were mortified. Jackie drove down here early in the summer, And she couldn't believe how people were walking around, because her and her friend who came down, they've got masks, they've got their hand sanitizers, they're like super careful, they don't touch people, they wash their hands every 5 minutes. You know, they're doing everything you're supposed to do. They came down to Florida and they're like, oh, Jesus Christ, what is going on here? People are walking around like just as if they're at the beach, no problem. It's crazy, but that's, you know, that's red state crazy. That's where we are. And if the country keeps going that way, it's going to get worse and worse and worse. And this thing is going to just keep spreading out of control. Look at us. Look at this. We're not even trying. Look at Brazil. You at least had some space in Brazil, and at least had some space in India. There's some spaces somewhere. We have no spaces. I mean, not here. Nobody lives here. That's not fair. That's like saying Russia's got it under control. Russia doesn't have it under control either. Russia's terrible, but nobody lives up here. Okay? Nobody lives here. There's no people. That's why there's no virus. Anywhere we have people, there's a virus. So much that you can't see the country. Japan, terrible also. Another guy like Trump, Abe, like Trump. Modi, like Trump. People who lead this way, what's his face in Brazil, like Trump. All these autocrats who think they're smarter than scientists. Boris Johnson's country is buried. You know, these autocrats who think they're smarter than Spain, another great one. They don't think they need to listen to science. They don't think they need to do anything. They don't want to infringe on the freedom to do whatever they want to do, blah, 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 whatever. Bullshit. You're infringing on people's long-term future. You're infringing on the future of the nation. This is horrifying stuff. It really is. Robin says, Phil, you're scaring the market. I know, and I didn't put my NASDAQ bet back on. I'm so pissed. Yeah, I'm scaring the market, and my goal is not, I don't want to say I'm scared. I mean, my goal is not to scare you. My goal is to wake you up. And I'm sorry, I don't have a topic for the day. I don't really think about this. It only drifted that way, as you can tell. It just kind of drifted that way from me talking about it. You know, because I'm like, this is what's going on in the market. I got to make sure everybody understands how irrational this is. There's nothing to be bullish about right now. It's a very dangerous situation. You've got to get your money off the table. We are positioned to make money in a bear market. That's not the same thing as leaving your money in a portfolio. Okay, it's like you still have time to stop pretending that it's a good idea to have all this exposure to the market. You still have time to go to cash. It is crazy to bet that everything is going to be okay when it clearly is not. You've got to face the reality of the situation. The reality is depressing. I was just saying that to, I'm going to be on Money Talk again in October 6th. Well, I don't know when the show is, but I'll be on October 6th. I'm taping it. So I was saying to the girl there that pre-interviews people, and I said, you know, because she said, you know, what do you, what's it like in Florida? Do you go out? I said, no, I don't really go out much. I mean, I like being home. I like my house. I'm happy. But I don't like to really be cooped up all the time. But on the other hand, I find I go to a restaurant. I'll go to a restaurant, put my mask on, and I walk to the restaurant, but I take my mask off. I sit down. I feel like an almost normal human being doing that. And the restaurants being outside restaurants that I think are acceptable to go to, which is a short list. But I'll go out once in a while to just get out of the freaking house. I go swimming in the pool. I don't like to walk around outside though, because you know, I'm either walking around where people don't have enough masks on, which I don't like, or if I go to the supermarket or something, I just start getting depressed because I'm wearing the mask the whole time, and I feel like I'm like in a post-apocalypse movie, you know, where I'm like just everyone's holding the mask on their face, and everybody's you're just going everywhere. You know, obviously everybody here knows that what it's like. I don't like it. It's depressing because it starts my brain going down this path of like, okay, so if you look at this, you know, I'm immediately like thinking about the rate of spread of the infection and how like dangerous it is to be in these places and how many touches you have. I think I told you guys about this a long time ago at the beginning of the thing. I was like, can't help it. I just start calculating, and I'm not a germaphobe or anything weird like that. I mean, I'm not even, and I'm not a what do you call it? OCD. I don't have OCD or anything like that. I just can't help myself from thinking. I have obsessive thinking disorder is what I have, which is why I get acutely aware when I feel like I'm losing pieces of my brain. So to me, I'm immediately calculating. I can't stop my brain from doing that. So like I walk outside and I touch a door and I immediately go 200. You know, I'm just thinking like how many people probably touched that door today? How many of those people are likely to have paid attention to the thing? How many people washed their hands recently? Did they come in? Did they come out? What part of the door do they probably touch? Blah, 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 blah. And so I touch the door and I'm like 50. You know, I pick a spot where I'm like 50. Okay, I'm 50 people. Then I go to the next place and I go somewhere else. I'm like 25, 17, 14, 30. And as I'm doing it, I'm running this total in my head. I'm like, okay, I just came in contact with like 300 people. You know, in one little freaking trip to the supermarket, I touched things 300 people have touched. Even though I'm being conscious of it, I'm still doing that. And it's depressing. But it's depressing for exactly what I've been telling you guys since day one, since we had 3,000 infections. You can't stop this, not without being really drastic about it like China was. We're not being drastic about it at all. When have you ever seen people walking down the street, cleaning the street and disinfecting things? When have you seen official U.S. Troops or employees or whatever the hell you want to call them walking around in suits, in clean suits, scrubbing all the surfaces, making everything clean and getting rid of the virus? We don't do that at all. Not even once. This is like basic stuff that Asia started doing back in March. You can't stop the spread of the virus if you take no effort whatsoever to clean it, to get rid of it. And if you don't stop the spread of the virus, if you allow people to get infected, then you are ruining the economy, and the repercussions are still coming back to bite us. And again, everything has been based on stimulus. We put trillions and trillions of dollars of stimulus into this thing, and it's running out. And now Congress is going on their little vacation. Congress is going off. I just wrote that today. I put up that article. Congress is about to go campaign. So it's over. They're not coming back. They're not staying here for us. Oh, how'd that happen? Logged out. Can't believe it's September 23rd already. It's crazy. The third quarter is ending. So where is this? Yeah, well, one of these articles. Look at it. This is what happens if you take a cross-country route. Trump country. It's like, they're called red states for a reason. Oh, I love this. Candace Owens, it's time for a black exit. Okay, this of course is Fox News. You know, that's why you get an article like this. This is Fox's job now. Tell the black people to leave the Democratic Party. Find spokespeople who are going to say that the Democrats are no good for the black people and blah blah blah. It's such bullshit. Unbelievable. And people are so gullible. Congress's failure. CIA clamps down. Gail says Democrats. I know I had somewhere. Look at that. COVID has led to trillion-dollar losses for workers around the world. Oh, can't find it. Oh well. But there was an article anyway. Anyhow, so it's just they're taking a break, Congress people, and because they have to go campaign. They're all up for re-election, so they don't want to not be re-elected. I don't know what they're going home for. What are they campaigning for? This is a weird thing. We're in a national crisis. They haven't voted on any kind of relief. They haven't got any aid. There's no extensions. We're out of money. We haven't done anything about fighting the virus or anything like that. And they're all going on a break. Mitch McConnell just told the Senate, we're out. That's it. We're not altering our schedule. And so if they're going to leave, then there's no point in Congress being there, the House of Congress. And everyone's going to go home and go to their campaigns. But what are they going home to campaign for? They're all going to be on TV campaigning. Stay in Washington and do your freaking jobs. You can't have a rally. You can't go house to house to meet people. You can't do the things you're supposed to do in a campaign. What you could do is do your job. They're literally going to go on vacation now until Election Day. This is crazy. We live in a crazy country with crazy people, and we put up with it. Wow, Dow's down 300 now. You're right, I am reading the markets. Okay, but on the bright side, there's no bright side. Okay, I'm sorry. So I get the press. I get the press going out. That's my revelation for the week. Let's see if we refresh this. So we're at 93%, and it got worse during the webinar. 91%. There's money pouring out of the portfolio, but the short-term portfolio, 375. It's gaining money faster than the long-term portfolio is losing money. That's the whole game, right? That's what we're aiming for. So, and meanwhile, what was the CMG? It was I bet CMG's coming down nicely too. So that's also going to pay off. That'll work out also. CMG. Oh, well, not today. It's up 3% despite. But still, so we rolled out CMG short puts up to short calls up to the 1200. So I think that's going to work out eventually also. And poor Tesla, they're taking a hit. There was nothing there on battery day. I don't know what people thought was going to be there, but they're down almost 10% now. Anyhow, so that's where we are. I'm just saying, like, honestly, it's so hard to protect your portfolio in a huge downturn. We're heading for a pretty big correction probably, and I keep saying it over and over, and I know it doesn't seem like it's rational because the market just keeps going up and up, but it's a market that's irrational, not me. I swear, I'm a rational person. I'm not crazy, and I'm not. I am a bleeding heart liberal, but again, it goes back to I'm a bleeding heart liberal because I think that is the logical course for the planet. I think that bleeding heart liberalism is what we need to survive, not hardcore conservatism. I think hardcore conservatism is a disaster. That's why I'm a liberal. I'm in it for the species. But you know, that all that aside, it's just making logical, rational decisions about the portfolio that this was not, as I've been saying since June, back here, 3,200, this is not sustainable. I said this was not sustainable when we were here. It's still not sustainable now. Just because we came back to it doesn't mean it's sustainable. This is sustainable. 2850 is our must-hold line. That's sustainable. We should be in a range from 2850 and 10% higher than that is another 280. So let's say 3100. That's the top of our range, not the bottom. That is a 200-day moving average, and it makes perfect sense that we should be 10% below the 200-day moving average while we work through the virus, and then we can start going higher once we figure that out. Anyway, so that's where we are. That's my report. And honestly, I have to run this today. So I'm just going to ask them a quick question, then we got to get out of here. IMAX, any thoughts on a 23 position? Again, I think long-term it's going to work out. I think our position in IMAX in the long-term portfolio is very solid. So yeah, my thoughts on IMAX are this long-term portfolio position, which is basically even, is the short $15 puts, which is an aggressive sale, and the 10-15 bull call spread. So I think it's going to be at 15. At the time, I only at 2020. But if you want to go out in time, I think the same spread in 2023 is great. If you're retired and need the income to own stocks like AT&T and Mo, do you just ride it out? I think you ride it out, but you got to hedge it also. You can't just, you can't just hope for the best. You have to do the hedges. And honestly, in chat, I got to go because I got to be on a conference call in 5 minutes. If you ask the question in chat, I'll be happy to do it. Just put down what your position is, and we can talk about ways that you can protect it. But don't just be naked. That's crazy. There's no reason to do that. We can find a better way to allocate it.